Good morning, everyone. Today is the 26th of December. This is Brad Matheny. Hope you all had a wonderful and Merry Christmas. We certainly did. Wonderful food, lots of fun, lots of great pictures. Everybody pretty much got what they wanted, which is exactly what was needed for Christmas. It was just nice to take a day off and relax with my son and my wife and my father and my brother and really just all my other family is hundreds of miles away, but the core group is all I need. Okay, let's get into it. So today we're moving into the post-election mode or the post-Christmas mode. We're moving into this bottom phase around January 1st. So understand that this bottom phase around January 1st is going to become fairly important for us in the sense that we're going to be coming into a bottoming cycle right around this area, January 1st, which is a weekend. Okay. And then we're going to be moving into, so I'm going to mark this as a bottom. And then we are going to be moving into there's our bottom. We get an inside pause, and then we get an inside blank day on the 3rd, then an inside breakaway, rally, 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 rally. Okay, so we're going to be moving into a very strong rally phase. Rally, 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 rally. Make sure of this inside breakaway. So 8th, 9th, 10th. 8th, 9th, 10th. Okay, so make these a little darker. Rally, rally, and rally. Now, you remember from the previous day's activity, previous cycle patterns, how these play out. And you can see my expectations of a topping pattern here. The expectations of the topping pattern near the beginning of the year really correlate to the other cycle pattern data that I did. So now let me find that and share that with you. Well, I do a lot of research. Look at all this. There we go. So this is the weekly cycle setup. And you can see here that we're getting around the 26th. We're getting into, 10, 17, 12, 26, 24 into bearish trending, and 12, 20, 1, 28, 25. We get into a topping pattern and then a peaking pattern. So now understand that that's the end of January into early February. So we come in here, we drag this out. End of January, early February, we end up in kind of a topping pattern like this, somewhere in this area. Now, that does align with this topping scenario right here. So understand that we move into kind of a topping pattern there. And we also have a daily Gann cycle function indicating a top on January 6th, moving into and a peak on January 31st, moving into a base on the 13th, and then moving into a top and a major top on the 18th. So now that puts us over here around the 18th, looking at around a base top rotation. So what this is telling us here, guys, is, and I'll have to redraw some lines here, base top disruption breakaway 23rd. Then we end up with the 31st, which is nothing, the 31st, which is a peak. That's going to be my peaking area into the top, major top, and then a base, and then a top, and then a peak with disruption moving downwards. So what we're looking at here is we're rolling through a number of cycle patterns. So let me get rid of some of these lines and explain to you kind of where we're at. So we're coming into this area here, but we're really rolling into this cycle peak and base. So we kind of get this broad rolling cycle up into this area, possibly down into this area, moving up into a cycle peak, and then rolling back down into rotation. And that gives us a broader context of where we're at. So near the end of the year, okay, we end up with this potential cycle peak on the 31st, moderate peak near the 31st. That's going to be coming up right in this area, rolling downward into a high, rolling downward potentially into a double low down here, rolling upward into the so let's mark these so we can do these right. So we have the top coming up around the 31st right here, then a base, then a peak on the 13th, major top on the 18th. So we're going to come over here to the 18th. So there is a potential as a major top right here. I know I've drawn it as a low. I believe that's where we're going to be potentially. And again, off these cycles. And that's because of this 13th base, major top. And then we get another peak with disruption, moving into strength and into a breakaway. So that is correct. This is correct. This is not correct. So let me try to do this and draw it again. And we're coming up here. We roll into this potential rotation. A little bit like that. Makes sense to me given my cycle patterns. I'm trying to map all of these out for you. So we have a peak base peak right between the 13th, well, the 31st, and then 13th, and then 18th and 20th. Then we end up with this strength and breakaway into the 23rd. So, we're going all the way out here into February. And I believe we're going to be looking at this chop over the next probably 2 weeks, rolling into this extreme volatility after the inauguration. Just so happens that that major top pattern happens right here just before the inauguration. Then we get a peak on the 20th. So you see here, major top disruption, peak disruption on the 20th. That's right before the inauguration. Then we end up getting a breakaway. I think the breakaway is going to roll to the downside. And that's where we're going to get these deeper lows. So where we're at right now is we are looking at this potential sideways mode. Today's pattern is, come back over here, an inside breakaway in trending mode. So obviously we've had this big breakdown. We are now in intermediate bearish trending with explosive trending. So an inside breakaway would be opening anywhere in between your the middle of this area here, the middle of yesterday's or the 23rd, 24th range, and then moving into a breakaway either to the upside, so from here up, or from basically here down. It's currently trading at 599. The S&P is, so that would mean that my numbers are a little off. Something maybe like this. I do believe that the current trend after this deep low is pushing back up to the upside. But I would be cautious of a potential breakdown here, back down into these lows, retesting these lows, because we have this momentum rally tomorrow, meaning that a pullback today would be, would be fairly common. Pulling back down in today, giving us a good solid momentum rally tomorrow, maybe up in this area, moving higher, would not be uncommon. It really would not be uncommon, in my opinion. So we're looking at a pullback, basically a moderate pullback, but could be an inside breakaway in trending mode to the upside. Remember, we had that rally mode on the 24th, played out beautifully. Now we have this inside breakaway, could be a carryover rally leading into Friday's rally. So we got to kind of see what happens in the morning. And that's what I would be urging you guys to do. If we get, some strength in the morning, we could easily come back up here and test this upper range 601, 602. If we do not find strength and it tends to move downward, then we're going to be looking at a pullback down into this probably 593, 594 area. Okay, so let's go ahead and go to QQQ. Same basic setup, guys. So this is my drawings from earlier. We're looking at, again, an inside breakaway starting in this area somewhere, potentially carrying up or potentially breaking down because the trend is, like I said, bearish, but we're getting that momentum. I'm trying to end. It's the day after Christmas. Play safe. Don't get overly aggressive of where this breakaway is going to be. We're in bearish trending. We're in bearish biasing. It's an inside breakaway, but we're moving into the momentum rally. So I'm just going to urge you guys to play very safe this morning. Real quickly, I'm going to go over some things here very quickly. The spider sectors have proven to be quite bottomy here at the moment. So now look at these on daily. Energy sector, basing and bottoming deep. This is that deep anomaly low that I was telling you guys about. Okay. And it looks very strongly like these have reached that low and rolled. Okay. It really looks like a good solid basing setup. XLU, same thing, rolling down and really setting up kind of a good solid base off the last couple of days. XLK technology, very light roll down, moving back up fairly consistently. XLB, which I love this setup. Look at how deep this is and look at how nice this is to the upside. But then again, pay attention to the fact that you've got, a very solid roll potential back up into this area or this area, or potentially up into this area here. That alone on this XLB symbol could be a 4, 6.5 to 7.25% rally phase, just on a reversion. Very clean upward reversion here. XLP, consumer staples, again, very deep low, engulfing bullish pattern, looking good for a base in the markets right now. Consumer discretionary, minor pullback, setting up a big flag. You can see the excess phase peak pattern setting up here, looking pretty good. XLI played through the anomaly event very well. Nice base bottom here. Remember, this was the anomaly event that I was warning was going to happen, and it eventually did. So now we're looking at this downward cycle trend. Got to get rid of these lines in here. I must have been busy drawing. But now we're looking at a good, solid potential recovery. And when you just play with these and you add a simple Fibonacci in here, your targets become very real. Each one of these is from where we're at right now, 2% to 3% to 4.17% rally just to get back up into the midpoint area. So you've got a pretty good potential of a rally phase in the market trying to recover just into the midpoint area of this breakdown, of this anomaly event. XLC, broke down a little bit. This is communication sector, really potentially heading back up into this area here, 101, 102. XLV, healthcare, boy, big breakdown, right? So we've come all the way down to breakdown. We've run into sideways trending, and then we broke down, pause, broke down, pause, broke down, pause. Now, this is a big excess phase peak pattern. Okay, it's a very large excess phase peak pattern setting up this new low back over here. Deeper low means that we have a chance that we could roll back up out of this and then attempt to set up a new low. But again, if we get any kind of recovery, remember, we've wiped out pretty much all the gains of 2024 at this point, going back over into this area, beginning of right there, January, December. We're literally wiped out all the gains of 2024, just a little bit above it. So even a moderate recovery here would be a move up into this area, which is still a 6 to 9% upward move. XLF, moderate roll. You can see we've come back down here, maybe heading back up into this topping formation to extend higher. And XLRE broke down quite hard. We're moving down into that consolidation range. This could take a while to break out here. So again, XLRE may move down into this 39.20, 39.30 area and stall out. Real estate could become an issue, especially if the Fed starts excessively, raising rates. But again, this looks very interesting to me, particularly this XLB deep low. Yes, we have a potential for a little bit of a downward move here. You can see the flagging formation. We should be moving into consolidation. Consolidation here should be capable of rolling across the flag low, potentially anywhere into this range before potentially breaking downward through this consolidation range. So I think we're looking at a pretty good little bump to the upside here in the markets over the next 10, 15 days. So let's go over here to gold and silver. Gold and silver have a crush pattern, a big major crush pattern. If you know anything about crush patterns, folks, they can be pretty big. Okay. In other words, you could have a very big down day or a very big up day normally on a crush pattern. I forgot to go check over here why we don't have this trending. I will check that today and try to update this. But the crush pattern now for gold and silver after this deep low, trying to set up this move here. I'm looking for, again, a moderate recovery back up into this area, back up into this 2700, 2690 area. And again, for silver, back up here, 3140, 3150 area. So that's kind of my crush range right here, looking for that kind of a move. We still have to be cautious of the downside. The metals are moving downward generally. Okay, it's been an extended low, and you can see here if I move all of these to daily, you can see that we are struggling. Gold is still off of the recent lows. Silver is below the recent lows. Okay, so this is again struggling to try to find support. But I do believe, and this is just my opinion, that silver and gold are going to attempt to recover back into normal ranges. And when I say normal ranges, I'm talking this 2700, 2720 area for gold. And I'm talking 31, 32 area here for silver. I think that this has been kind of a washout move. And I think a reversion back up into this 382 area. And in this case, back up into this 382 area, which is 2713, is a pretty common target for gold to resettle before making moves after the inauguration. All right, so now we're going to go to Bitcoin. We'll come over here, go to Bitcoin. And there's our move. This is daily. I'll bring it down into 4 hour as well. Boy, I got a lot of drawing here. I need to spend some time cleaning this up. You can see the roll. You can see the actual flagging formation here. Let me just get rid of some of these lines. A lot of these lines. Okay, get rid of some of these. I'll put them back. You know me. Give me enough time. I'll draw everywhere. Okay, so flag out here, get rid of these. Okay, here we go. So we have come right back down into this channeling low. Oops. We've got a peak pattern here rolling down into flagging. We're about ready to break down, and that would move us into a sideways consolidation pattern. Now, you have to look at this level here, and sideways consolidation is likely going to come across this level right here. So, give you an example, I would expect consolidation to move down into this area and then a potential breakdown into this area. And you can see this is all off a daily. Here's our peak, here's our pullback, here's our flagging. Now, you could argue that we had this big high right here. Yep, we could. Let me make sure that that's not my line, my box being drawn. Yeah, that's fine. There's our high, there's our flagging. And you can see on a daily basis, it looks like we're rolling downward, breaking below the low here, which is this is the flag low right here. Breaking below this level, 20 or 92,200 roughly, would move us into consolidation, likely above 86,650 roughly, and then likely breaking down into a low pattern here around 72,500. So be aware, guys, we're in this kind of consolidation range. We're not getting any real strength yet, and that could lead to a broader rotation here in the SPY. You can see the SPY daily chart rallying quite nicely up into this area. How much higher do you think we're going to go? I personally think this 603, 604 area is going to be it until after the inauguration. So, my personal bet is right in this area, it's going to run into some fairly strong resistance and struggle. So we'll see how we play out here. Got a lot of big bars. I mean, look at this. These bars are huge compared to previous price bars. I mean, absolutely massive. So understand that we are going to settle out. It's probably going to settle out back over here after the election, but right now, this is extreme volatility. It's low liquidity, volatility, and price action, and you have to stay very cautious of what's taking place. Okay, guys, I'm going to try to get this uploaded for you. Talk to you later.